All right, guys, I want to talk to you today about seller financing. So, at the beginning of this recession, we're just beginning an economic downturn. We've got lenders taking a pause, stepping back. We've got stricter lending rules. We need, higher credit scores, more in reserve. It's just harder to get money right now. And because of that, it's going to be harder to buy properties, which means if you're selling a property, it's going to be harder for you to sell it, right? Because there's going to be fewer buyers, fewer people who have the opportunity to buy, and also fewer people who have the motivation and desire to buy properties. So as a seller, a good opportunity right now is to offer seller financing. And what seller financing is when the seller basically becomes the bank. So if a seller has equity in a home or owns a certain portion of the home, or owns it outright, they can then finance that sale to their buyer. And that the property will still close, a title company will still oversee that transaction, the deed will still transfer over to the new owner. And basically now there's a promissory note from the seller to the new buyer, and that will be financed to that new buyer over a period of time at a certain interest rate. All things that are negotiable, pretty much everything in real estate is negotiable. So when you are looking at properties as an investor, I always ask the question if there's an opportunity for seller financing. Sometimes sellers don't even really know what that means. Sometimes realtors don't even know what that means. So you might have to dig a little bit to find out if there's even an opportunity there. For example, if there's a property on the market for $200,000 and the owner owes $190,000 on it, there's a mortgage on it, there's not really any room for seller financing, right? But if that property is owned outright, there's lots of room for seller financing. Or maybe there's only $40,000 is owed left, only $40,000 more is owed on the mortgage, then they can finance the rest of it. You would just have to bring $40,000 as a down payment. So that's just an example. It's all dependent on the situation with the current owner. But again, always negotiable. It's something you can always discuss and you can always ask for. I always would ask for that. And what I typically do is send out a LOI, letter of intent. And I said I'll either buy it cash, or I will pay more money if you're going to finance it to me, because then I don't have to deal with a bank. I don't have to get pre-approved. I don't have to come up with the money. And, worst case scenario, you take the property back if I default. So it's a pretty good scenario for you as an investor. It's a great opportunity for you, actually, and can be a really good opportunity for a seller too, especially if they're feeling the pressure and they're stuck under a property. So go out there and ask for it. Ask the question first. Is there an opportunity for seller financing? And depending on the answer to that, get the conversation going, get the ball rolling, throw out some terms, what makes sense for you, something that can still make the property cash flow, and just start negotiating. All right, good luck. Let me know how it goes.